Hey, welcome. Thank you for joining on here. Let's start off here my name's Ryan, and Daniel is hosting up as well. This is our first time doing this, so really appreciate you jumping on here and taking the time on your Thursday evenings. Did not realize it was such a technical feat to put a Zoom webinar together. So we're happy to have it put together here for y'all to and hopefully take away some insights today. We'll go to the next slide and give you a quick overview what we'll be discussing on this webinar. All right, overview. What we'll be covering this evening is historical context. How did we get here? What did last year look like?
你是不
Daniel's
是
going to
没有
cover it on the
网络？那
2026
你有
and
网没有
beyond uh,
啊？
forecast, and also the opportunities in the marketplace, as well as where to be a little bit cautious. Finally, we're going to finish off on why Vancouver long term and a Q&A at the very end as well. All right. A bit about Daniel and myself. We are both licensed with Rennie and Associates Realty since 2018. We have a lot of history with the pre-sale construction space, especially with working on some sales in Surrey, Coquitlam, and Delta, launching some high-rise projects with them. Daniel's done some rental housing as well with Rennie. And the last few years, we've really been focusing on the resale business, primarily working with upsizers, first-time buyers, and downsizers as well in this marketplace. So, 2025 in summary, we're just going to look at survey says, if you get any Family Feud people out there, survey said last year the biggest reason why people were bought a property was an upsizer. So 35% of respondents said upsizing was their main motivation for buying last year, followed by first-time home buyers, change of location, and downsizing. You may notice a notable absence on this is the investor segment. And this is what 2025 was very, very quiet on the investor front. We can personally attest to this on our client side as well. Most people that transacted last year had a reason to, and being the demographic we work in, it was primarily upsizing, as well as first-time home buyers. So we've been very fortunate to have the privilege to work with our clients who are upsizing this market. It's not an easy market by any means, but we're very blessed to have our circle of friends, clients, and network that are continuing to transact in this difficult market. So 2025, what did it look like overall? Well, we came in at 35,000 sales in 2025. How does that compare to historical data? Well, 2008 was actually a little bit better than last year from a sales perspective. So we were a little bit under 2008. And when you actually go back to the year 2000, this was the lowest sales count since the year 2000 in terms of transactions that occurred. Another data point to consider is the bull market 2021. We had 70,000 MLS sales in the greater Vancouver area and the Fraser Valley board. That's double what we had last year. So basically twice the amount of transactions that happened in half the amount in last year as 2021. And because of this, less transactions occurred. We had a pooling of inventory. So we finished the year on a high note, and high notes typically reserved for a happy, great notation, but this one here, not so much in the sense of historical inventory. This is 63% higher than the 10-year average. So 18,000 homes on the market, basically waiting for buyers to come purchase. From being on the ground, the reason why this is so high is when we're sitting down with sellers right now, everybody wants a certain price and they feel like their home is the best. Because really, you bought it because it is the best. We love our homes. But we gotta say, Mr. Seller, Miss Seller, in your neighborhood, only one out of every homes sold last month, right? So when you think about that ratio, for us to sell, we need to be the best price on the lot, basically in the neighborhood. We need to have the most features and benefits, or we better be very unique. Either we have a view, a massive patio, maybe gold toilets, I don't know, but something to stand out from the crowd because 7 out of 8 listings are not selling. And the reality is that most people don't need to sell right now. You have a lot of people that are sitting on debt-free land. They paid off their mortgage. They don't have to sell. They're happy to wait. You also have the other flip side of it where people purchased 4 years ago and they're seeing their pricing has gone down 70K. So they're going to have to take a $70,000 loss to sell. And some people are electing to maybe just wait. I don't need to take that loss. I can handle my house a little bit longer. And because of these reasons, a lot of people are not selling and it's pooling the inventory right now. The few people that are selling, as we mentioned, the D's here. The D's are real estate, death, divorce, bad debt. My favorite one, diapers. Babies mean you need more space. So these are the select few that are transacting, while most people are kind of just putting on the market, waiting and hoping. So because of this, the people that do need to sell are needing to take a lower price. The buyers are comparison shopping. They're looking around, they're making offers, and the one out of every seven homes that sell is usually selling at a lower price. What we've experienced in 2025 is a 6% decrease in detached home prices, 5% decrease in townhouses, and 6% in condos. So townhouses did a little bit less bad than the other two. But again, not an amazing year by any means. But this is just in the past year alone. We've had about the 5 to 6% decrease in prices. All right, so what can history tell us here? So looking at our historical last three corrections here, how does this one compare? Well, we look at the 2008 correction. There's a 13% drop in pricing, right? From peak price until the drop and then back up. Took a 13% decline. 2018 was an 11% drop in price. Meanwhile, 2022, we're at a 10% drop in the price right now. But this one is quite unique in many ways, and I'll talk about that in the next slide here. So this has probably been the most long drawn out correction we've ever seen. Compared to the past two, it really is much longer. So we'll start with the first correction in 2008. We look at the black line. So May 2022, we saw prices drop down from peak price until the bottom. It took about 11 months to go to the bottom, and it took about another 11 months to recover. So total was about 21 months from down back up to peak pricing. The second time was 2018. It took about 16 months to go to the bottom and another 16 months to recover. So total was about 35 months. We are now sitting at 44 months since the peak pricing. That's almost 4 years. And it's kind of arguable whether we have more room to move down. We think there still is some downside potential in the next year, but long story short, we feel like we are closer to the bottom than we are to the peak pricing. So we don't think we are closer to the worst of it, and we should see some recoveries fairly soon. But I don't want to steal Daniel's thunder here because he's going to talk about the future stuff. But one more thing I'm going to add here, this red line, which is very interesting. We look at the past correction. We actually had two mini bull runs in this past correction. So 2022 was quite a down year, about a 10% decrease in price. But early 2023, we saw prices bounce back up. The reason for this is because nobody was listing their homes in 2023. And the irony of why is because they thought it was a bad market to list. Everybody thought, no, we shouldn't be listing our homes right now. So what happened is when it looked like interest rates are decreasing, the buyers got very excited. They wanted to get in front of the market. They wanted to buy. And because there weren't many homes on the market at the time, the ones that actually did list got bid up. The same thing happened in 2024. Again, not a lot of inventory. Everybody's waiting for interest rates to come down. Nobody listed. So when people saw rates coming down, they jumped on the few properties that were available. And that was another bull run in 2024. But in 2025, that cycle broke. What happened in 2025 is a lot of sellers thought, hey, you know what? Interest rates are finally come down. We're going to list now. It's a great time to list. And because everybody thought that, inventory ballooned. And you throw in the tariffs, you throw in geopolitical tensions, it really took some buyers off of the marketplace. So not only had a lot of people listing, you had less buyers, which has translated to why we've seen another decrease in price in 2025. And now we're sitting about 10% from May 2022 peaks until December 2025. And this is a generalization for the entire market. Fraser Valley has been hit harder than Vancouver. We can talk about that more later if you wish. But I'm going to pass it off until Daniel here, and he's going to talk about the future of 2026 and onwards.
Yeah, thanks, Ryan. And as we were talking there about some of the mini bull runs we had a listing. Remember, we launched in January of 2023 with very little expectations. And then when we hit the market, I remember I was at the open house alone. I was just blown away. I think we had probably 40 groups through that day. It was shoulder to shoulder. I felt like a house party, and groups were giving each other turns to get up and down the stairs. Oh no, you come first, and then we'll pass by and squeeze by here. It was a crazy, crazy time. So you never know what can happen with these markets here. But I want to focus on what's coming up ahead on 2026 and beyond here. So predictions, talk a little bit about interest rates, why they're likely to remain at current levels and why there's stability going forward here. There's only limited room for them to have any meaningful cuts, meaning we can't really depend on lower interest rates to sort of reignite the market. The next one is just inventory. As Ryan's already alluded to, inventory is very high right now. We're starting off at a very high level. And just given the slower level of absorption, we expect inventory to remain high, likely meaning price appreciation is probably not in the near or medium term here. And then finally, we're going to get to rental rates and talk a little bit about rental. There's just been a lot of changes with what people are building. We're seeing a lot more rental coming to market. Last year, we saw rental rates drop and why we believe that rents will further soften here. So not a ton of optimistic news, but we'll get to some positive stuff near the end here, okay? All right, time to get used to this. Right now, the overnight rate sitting at about 2.25%. This is slightly lower than the long-term average, which is about 2.73%. So the overnight rate is what directly impacts the variable rates. It does impact fixed rates as well, but more by impacting the bond market, which is what is the fixed rates essentially follow here. But I mean, I remember COVID rates. And I wish I went with my gut and gone with the fixed rate at that time. I got my mortgage, but I think I listened to some advice. I went variable, and I took this very fast elevator ride up, from a sub 2% mortgage to, upwards of close to 5% or more is that I had there. And, the old saying that you take the elevator up, but you take the stairs down holds very true. We saw rates basically being at zero to hitting generational highs at around 5% there. And then we took another 17 months to come back down, but we're only halfway from where we started, right? So, rates are probably going to remain here for the key reason that it's what the Bank of Canada actually wants. Their current view is that 2.25% is about the right level to keep inflation in check. Keep in mind why they brought interest rates up was to take care of rampant inflation. They don't want to go too low. That will bring inflation back, but they also want to keep it kind of at the right level there to stimulate growth for your economy. So not too low, not too low, not too high in the neutral range. There was a rate announcement yesterday, and it came in as expected. They were not going to change the rate, and they're going to hold it. Why rates are important here is because those last two price cycles that Ryan talked about, the 08, 09, as well as the 8, 17, 18, the price recovery coincided with rates actually coming down. And because we're starting already at the lower end of the neutral range here, they're stating that they're not bringing rates down anything significant. Maybe we'll get a quarter basis point drop, but nothing like we saw before. So because of that, we can't rely on these interest rates to save us, right? Essentially because they're already quite low. Plotting a trajectory of recovery timeline, and we're using, let's say, the 2017, 18 recovery, which is about, 17, 18 months. That would bring us to May of 2027. The Intel team and everyone we've talked to and how we feel is it would be incredibly optimistic to say that we will have a return to peak pricing by May of 2027. Now, that doesn't mean that pricing won't increase before then. We might see some price increase. In fact, I'd say likely we'd see some price increase. But we are unlikely to see a recovery to peak pricing. So, we're in a market now. We're 44 months into this, and it feels like it's wants to run and wants to go up. And we saw those previous little runs there, but unlikely to see a return to peak pricing in that time frame there. As Ryan mentioned as well, we have a lot of listings right now. So we think about we're starting the year off with more active listings than we've ever had since the end of '08 and beginning of '09. So if you think of this as a race, we're starting at a big disadvantage. So, there's going to be a lot of sales that are going to need to transact for us to be able to churn through the listings that are currently active right now. So what's happened here? We have approximately 8 months of built up inventory, right? We would need to hit a sales count of about 55,000 sales this year for inventory to come down to the lower side of a balanced market, right? As inventory pools, it heads into what we call a buyer's market. Buyers essentially having the leverage and negotiation and the ability to negotiate prices down. So that drives prices down. When it's a seller's market, the sellers are the ones getting all the offers and they're saying, well, can you come up a little bit more? Can you come up a little more? That brings pricing up. For the most part, in all product classes, we're essentially in balanced territory with detached actually sitting in buyers territory right now. And just based on trajectory of what we expect the number of sales to transact, it's unlikely we're going to see supply come down to the point where we have buyers fighting for listings again and pricing going up. In addition to the inventory we've discussed, now this is all on the MLS already. There's something called shadow inventory, and these numbers are not really accounted for, right? These are the homes for sale by developers and brand new developments. You know, when a development goes on sale, they're not posting every single unit they have for sale onto the MLS. So these sales counts sort of get buried. Uh, available homes to kind of cut buried here. So the estimate right now is about 15,000 homes are released and currently unsold. Half of those homes, so call it 7,500, are already under construction with their completions being imminent. 31% of those homes are actually complete already. You can go view them today. You can see, touch, feel them, and they just haven't been sold, but they're ready to be purchased and go to their new owner. The other 19 or so percent are in pre-construction phases, meaning they're pre-sales, they're proper pre-sales. There's no hole in the ground yet. And some of these we might see canceled. Honestly, we've seen a lot of delays and cancellations of projects. So what does that look like? Well, we've seen a lot of building of shadow inventory here. So the completed and unsold inventory is going to be the biggest growing segment. And it also has the biggest impact on the market because it's tangible, it's real, it's there. And when they're finished, the developers are more motivated to actually sell these homes. So we've seen a growing of inventory in this segment here, right? And think about half the homes, 7,500 already under construction. So they're just going to move from under construction to completed and unsold. Next year, pardon me, this year, 2026, they're projecting about 1,300 homes to be completed and unsold. And 2027 being a big year for completions as well, about 3,000 unsold homes will be complete at that time. Keep in mind, last year we only sold 6,000 new homes entirely in the new home space, and only one-third of those were for completed product, meaning we're selling maybe about 2,000 or so completed unsold homes per year. So we're not selling it enough to absorb this inventory. To give you an idea of where a lot of these pre-sales are completing right now, this is a snapshot of around the end of 2023. The red ones represent ones that are complete as of end of last year. We see a lot of units in Burnaby, Metrotown, Brentwood in particular. I mean, we just had a listing in Burnaby. And it was a great listing, nice floor plan, nice view, top floor, good price, but it just took a lot of time because there's so many options out there. I mean, if you're a buyer right now, it's a little overstimulating of how many options you have. Other areas where you see a big influxes of supply, definitely West Coquitlam, like Burquitlam area there, Richmond, New Westminster. Vancouver's definitely got some as well, but not quite as many as some of these other markets there.
Yeah, just a quick story here. Like my brother and I, Daniel, I here, we listed two Mount Pleasant condos in December, and they both got
Yeah.
accepted offers within a week. And we were, so every market is going to have its own nuances to it, and we got quite good prices for our sellers for those Mount Pleasant condos. So Mount Pleasant is a hot neighborhood that's still turning along just fine. So it's very patchy right now.
Yeah, thanks, Ryan. And then one other thing we want to mention as well is there was a lot of investor purchased condos, right? Back in the pre-sales were happening in 2020, 21, 2022. There was quite a bit of speculation in real estate. And, from some of the questionnaires that were put out by Rennie there, almost 50% of the purchasers in some of these buildings were, in fact, investors. So what that means is when these buildings actually complete, let's say in 2026, 2027, a lot of these investors may not want to keep those homes. They may choose to list it. I would assume most of them are probably going to be putting them up for rent. So that's going to have an impact on the rental market, which I'll talk about in just a second. So we might see some more homes hit the market when these buildings actually complete. And then they're going to be in competition with the homes that developers still have for sale. So again, the pre-sales are completing right now. The stuff that was selling back in 21 and 2022, it takes about 5 to 6 years to pre-sell, construct, and complete. So in summary, that was a lot of talking there. In short, if you're waiting for rates to go down further, I wouldn't wait much longer here. We've seen a lot of stability. I mean, the quotes from brokers that have been coming in it's been pretty stable since the fall. So we can't wait on lower rates to kind of save the real estate market right now. And then inventory is high. It's going to be staying high just because there's a lot of completions, a lot of inventory coming to market. So in our view, we don't see pricing really taking off this year, but probably in a few years from now. I want to touch on purpose-built rentals as well. So, what is purpose-built rental? A lot of developers have been shifting to building these instead of your typical condo buildings. Main reason is it's quite difficult to bring a pre-sale condo to market right now and sell 60% of the building, which is generally what's required for them to get your building financing to actually move forward with construction. So instead, we're seeing a pivot from a lot of developers to building an apartment building, right? It's all for rent, nothing's for sale. It's owned by, REITs. Sometimes it's owned by the developers, but it's generally owned by one entity. We're seeing a lot of purpose-built rental coming to market. Last year was a record year. Over 5,800 units were delivered to market. And then over the next 4 years here, we're going to see between 17 to 18,000 purpose-built rentals being brought to market, right? And what this is going to do is going to bring a big amount of supply, which is therefore going to bring rental pricing down. Another reason why we believe rental pricing is going to be coming down is the aforementioned investor crowd that we just talked about. A lot of those is going to bring tons of supply when they put those homes up for rent. And on top of that, the federal government has changed their population targets, right? So we had approximately 7% portion of the population being non-permanent residents, the bulk of which were students, international students, and temporary workers. So they want to get that 7% portion of the population and they want to bring it down closer to 5. What this actually translates to in numbers is around 800,000 people are going to be leaving the country over the next 2 years. And the cities, the big cities such as Vancouver, are going to be disproportionately affected by this. Vancouver takes in something between 5 to 10% of these. So by our calculations, around 30,000 people are going to have to leave this year, another 30,000 next year. So about 60,000 over the next 2 years here. And what that's going to mean is we might actually see population decline, although it'll be very small for the next couple of years here until the end of 2027. We may see the population decrease. And this is something we've never had before. This is unprecedented, right? It's just a pause right now, but immigration will increase and non-permanents will increase. And we'll talk about immigration targets a little bit later. So finally, let's get down to predictions here. I mean, rents went down about 8% in 2025. They're predicting between 4 and 5% for 2026. And I can say that this is very, very real. We look after a couple of rental properties ourselves, and I'm not joking here. Last Monday, I ran an application through for a prospective tenant, and everything was ready to go. Met him and his mom at the unit with suitcases in hand, brought them into unit. We're just going to review a few more things. And before I could even sit down, the mom's asking me, "Oh, I saw this other unit here and it's cheaper. My other son's telling me that this is too much money." And, we were trying to rent this thing out for 2,600. Whereas last year and for past few years, we were able to get 3,000 a month easy. So the last minute, basically, they just changed their mind. She said, "I'll rent it for 2,200." And I said, "Okay, well, unfortunately, that's quite far from what we had agreed to." We ended up renting it for 2,600 for somebody else, but this is the reality of what's going on. They literally walked away with suitcases in hand over rental rates. What's the monkey math? A lot of condos coming to market. A lot of those owned by investors will be added to the rental market. A lot of purpose-built rentals coming, plus a decrease in population means rents are going to be going down this year. That was not the most uplifting, but we'll end on a more positive note. But Ryan, right now, can you tell us about some opportunities in this market?
Absolutely. Yeah, we'll talk about what we see coming in and what we think is our good moves to make in 2026 here. So we'll go to the next slide. So upsizers, we give a strong buy rating for 2026. Much like 2025, we think that trend's going to continue here. When you think about a ratio theory, you think about a 10% decrease on your condo price, say $800,000 condo, that 10% decrease is $80,000. Meanwhile, that $1.5 million house, that 10% decrease is 150,000. So you're kind of taking a smaller loss to get a bigger discount on the buy because it's proportionally dropped by a similar amount, but the dollar figure is going to be larger. So by moving against the grain and trading up, you're in a net positive situation. Also, it gives you way more time right now to shop and find your forever home. We've done showings, second showings, even third showings. We bring your parents, bring your dog, bring whoever you want. You can really ask the world and take your time right now and find the place that you're really happy with. This is very important when picking that home you want to stay in for 5 to 10 years. You can do inspections, you're not competing. So this is definitely presenting a lot of opportunity for the upsizer crowd. The cons of buying right now or upsizing would be maybe you don't need the space for 3 to 4 years. It might make sense to save on your mortgage costs. So the question to ask upsizers is, will we need more space in the next 2 years? If that answer is probably yes, now is a great time to move upwards in the market and trade for the larger product type. First time buyers, again, I think trending is continuing in here because now the government's introduced a GST rebate for first time home buyers. As you may have known from the election campaigns, it's still not signed into law just yet, but it should be very soon. Essentially, this will be a 5% rebate on a purchase of a brand new home under $1 million. That rebate goes to from 50 grand a million to about $0 at 1.5. So to sliding scales, you get closer to 1.5. This rebate only applies for homes purchased after May 2025. So we do have a fair amount of clients that bought pre-sales maybe 3, 4 years ago that are completing in a couple years. Unfortunately, they will not qualify for this. It's only for people that inked deals May 25 and onwards. That's something we're trying to work through right now, see if there's any workarounds for our clients on that front. But if you're looking today, you can get that rebate. No transfer tax under $1.1 million. That's a 2% savings, another 20K. This is not exclusive to first-time buyers. Anyone that's buying a principal residence from a brand new developer, brand new from a developer, you get this credit actually, or this redemption. If you're a first-time buyer, you can stack these two. If you're buying something under 1.1 brand new, you can get that rebate and also you get that transfer tax redemption as well. The FHSA First Time Homebuyer Savings Account. If any of you on the call know anyone that's thinking about buying the next 4 years, they need to open one of these ASAP. It takes 10 minutes to go to the bank. You can open it up. You don't need to put any money into it. And essentially, you start building that contribution room the day you open it. So you get $8,000 of contribution room per year from the year you opened it up. And this is tax deductible. You can invest it. And much like a TFSA, these gains are tax free once you take them out to put towards your first time home purchase. So it's a great plan and definitely open one up even if you're not thinking about buying for a few years. The final one is the RRSP homebuyer program. They just upped it to $60,000. You can take out from your RRSP and put it into a down payment for your home. This is more of a loan to yourself, so you do have to pay it back eventually, but there's no interest on it, and you do get that tax deductible advantage from the beginning before you put it in, and obviously you get that advantage when you take it out to put for your down payment. Cons, what we watch out for in general is like older buildings in general. Like just would avoid older buildings. There's so much inventory, there's so many options on the market. Why go after something that's going to have special levies? Why go after something that's going to have problems when there's nice, brand new, or inventory that's under 10 years old is going to have a lot less headache and there's options. Just go after those. Also, lower rental rates in the next year, year and a half are going to be enticing for first-time buyers. And if your plan is, you're comfortable with your rental situation, you want to save some money, honestly, renting, you might not hear realtors usually say renting's not a bad option, but this is one of the few times when we might actually like recommend it. If you're not ready to plant roots just yet, and you don't have that 5 to 10 year horizon, renting is a totally viable thing to do right now. The question for first-time home buyers to ask is, am I ready to plant roots for the long term? Because you really got to think long term in any real estate purchase right now, especially. One more thing I'll add is, before, 5 years ago, people would buy a condo for a couple years, build some equity, sell it off, and roll it into the townhouse. Like that plan could still work, but instead of like a few years, you really, again, have to have that 5 year window. And if it's a matter of saving an extra year or two to get that townhouse, which you can stay in long term, It might make sense to wait, save a bit more, and buy that townhouse and not have to resell it and move again in a couple of years. So it's again something we can talk about on a case by case basis, but this is the first time home buyer opportunity here.
Yeah, and maybe just quickly, I mean, if you are in the rental, if you're renting right now, potentially talking to your landlord, seeing if they are willing to negotiate with you. They don't want to lose a good tenant. You're able to put those savings towards your purchase. That's definitely to your advantage to try and do. I remember when I was working on the rental building, we were also at the time was peak COVID, so the rental market was actually quite weak at that time. We were doing 2 months free rent on a 12-month lease. So these kinds of promotions are certainly out there, and maybe if your window of buying is in that 12-month period, that could make sense for you to do.
Thanks, Sam. Investors, if you're a straight investor here, we might urge a bit of caution the next year. We would focus on markets with a lack of rental supply and lack of pre-sales completing. So you look at Sea to Sky Corridor, Whistler, downtown Vancouver to a certain degree as well. There's just not a lot of rental supply coming in and not a lot of pre-sales coming in either. So these are good markets for rental. But in general, there's going to be downward pressure on rental rates in the next 12 to 24 months. So if you can wait a bit, we would say it's not a bad option to wait and kind of see it later this year or next year to purchase. Especially with tenancy regulations, it's really tough to resell a home with a tenant right now, and it may be just better to wait this year and see what things look like next year on the rental front. Of course, if you're looking to buy a place in Whistler and you get a benefit of skiing and staying overnight, there's value there. So if there's a hybrid a lifestyle component to it, you could definitely justify like a nice pied terre downtown. But generally speaking, if it's about the numbers, maybe stay away for this year. And final one here, very quickly. This is a bit of an outside the box one, but there's two houses here. One sold for $1.8 million or 175, and another one sold for 850K. And you might be wondering why the $1 million difference here. If anyone can guess, no guesses. All right, well, we'll give you the answer the next slide here. So the question is, Mom, Dad, can we build a home in your backyard? So Lane House builds. I feel like this is going to be another trending opportunity that we will see. Essentially, imagine if your parents have a piece of land that's paid off with no debt owing on it. By this point, if the home is ready to go and you want to build, you essentially just have to buy the build costs. So $850,000 is the cost for this 1,800 square foot home in South Burnaby. And what happened here is the daughter qualified for the loan for 850,000 and basically say, "Hey, mom, dad, do you mind if I build something in the backyard?" They said, "Sure." And here we are, basically saving them $1 million of less capital need to put up front. So it's just less capital intensive. You save that money. It's just less risk in general in that sense, as long as it's a good builder. If they get into a mature neighborhood like Burnaby or Vancouver, this opens up that option. And childcare, free childcare is amazing. Having a baby now myself, I know how much I appreciate that. So a lot of benefits to this here. And looking a bit further ahead, we're going to finish off with Daniel here.
Yeah, and actually, one other opportunity that came to mind as you're talking there is single family houses lead the charge in both when they go up in price and when they come down in price. And they've definitely started coming down harder in price than, their counterparts being, townhouses in particular. So, there's a lot of good deals on single family houses right now. And when prices do start to pick up, they will be the first ones to go. So if you were looking for a product type, I think single family houses, there's some good deals out there. And if you're not, if you're willing to roll up your sleeves and do some work and rental work, can definitely find some good deals out there right now. But looking ahead a little bit further, we want to end things on a little bit more of an optimistic note in terms of real estate. I know everything we've been talking about seems been a little bit heavier. So let's talk about some reasons why real estate may actually be picking up in pricing very soon. So we got to talk about demographics. Back in 1975, we had 6.6 and a half people working per every person that was not working over 65. Within the next 10 years, that figure is going to be falling down to 2.6 people for every one senior. So this is potentially going to break the country. This is not sustainable. This cannot work. And we're actually pausing immigration for the next, couple years here. The PR that we're going to take on, they're going to be conversions from non-permanent residents, and the rest of non-permanent residents are the ones that are going to be leaving. So there's not going to be a lot of new heads coming to the country next couple of years. But starting in 2028, we're going to be bringing immigration back and bringing it back hard, right? We're going more than pre-pandemic levels. Current target's about 380,000 people a year are going to be coming into the country. We need immigration. This is not a question. Like, it's going to happen. And what's going to happen is, pardon me, we need to actually be hitting targets closer to around 600,000 people a year in order to get this ratio to something more balanced. When you think of what we have here in Canada, such as like socialized healthcare, these platforms can't really work unless we have enough working people. So the upcoming supply crunch at the end of the 2020s. Let's recap of what's going on right now. Right now, so we have slow sales, we have high inventory, we have reduced immigration. That leads to falling prices and rents. Also means fewer project launches. There was about 70 project launches last year, like pre-sale launches. A typical year is about 150. Between all those 70 projects, we only sold about 2,000 units, right? So that's spread amongst them, which means a lot of those projects aren't going to be moving forward. They're going to be canceled or delayed. So you do the math, how many might actually be moving forward? Maybe 20, maybe 30. The rest of those developers are shifting to building rentals. We're not going to be building condos. We're not building a lot of long-term supply into the future. So what this is going to lead to is a lot of fewer homes being delivered in 4 to 6 years. Now, you mix in when the demand recovery comes back, we have an immigration rebound starting in 2028, and there's limited new supply. It's basic supply and demand. There's going to be a future supply shortage and prices will rise again. We saw this before. We saw this in the 2010s when the market was slow and they stopped doing pre-sales. And then when demand came back, there was not enough supply and prices went up like crazy. Like last quarter, we had the fewest launches in any quarter on record that we have, right? Going back well over 10 years. Mortgage rates, as we discussed, I mean, now these are kind of stabilized, but I can attest to the fact there's a lot of buyers right now who've been waiting for a sign to saying, okay, I'm just going to wait. Last year saying, I'm going to wait longer. We see rates coming down a bit more. Well, rates are not coming down significantly anymore, maybe a quarter point cut. So this is adding a lot of stability and predictability for borrowers and lenders. So it reduces your uncertainty. This has been a key factor for bringing market reentry. And we know there's a lot of pent-up demand. There's tons of people that are going through transitionary stages in life. They need to transact. And we haven't had the number of transactions that we're used to, which means there's a lot of people who have put off their plans. Maybe there's someone living at home right now. They've been thinking for like 1 year, oh, okay, I'll do another year with my parents. Then another year goes by. I can stomach one more. How many years do you think these people are going to want to wait? So there's a lot of pent-up demand right now. FIFA, the World Cup's happening this year in a few months. Hard to believe, right? But like, I don't remember if Expo 86, but apparently that had a profound effect on Vancouver being brought into the global eye. I certainly remember the 2010 Olympics and what that did. So we are a host city now, and we're putting Vancouver back into the minds of the global population. We've also had a foreign buyer ban for the past few years in the country. That's actually going to be coming to an end soon as well. So potentially some money from abroad could be coming back into the country. But yeah, we can expect to also bring a short-term boost to the economy here on a local level. Finally, let's not forget where we live. Vancouver is an incredibly desirable place to live. We consistently have high demand. We have the blueprint for expensive dirt because we have mountains to the north, we have the ocean to the west, and we have the border to the south. And as far as the Fraser Valley goes, which is the only real buildable area, we're building that as fast as we can. So that makes very limited room to build, and we can only really build up, which is what we're doing, right? So it's just an overall desired place to live. A lot of people want to retire here. People love the outdoor lifestyle we have to offer. We have abundant fresh water. That's definitely going to come into play later this century. So let's not forget where we live. It's overall a desirable place to live for people to come here and work. Not to mention with work, we have a relatively diverse job market here as well compared to some other provinces for sure. So that concludes the presentation portion. I know that was a lot of information, so we wanted to just open up to the floor and see if anyone had any questions they want to ask us. And if not, we'll kind of go from some questions that we got on Instagram and other platforms. Oops, sorry. I'll just Any questions there from anyone? Feel free to put it in the chat or unmute yourself and you can ask.
Anecdotally, what type of flex are you seeing in the closing price for detached right now?
Yeah. Yeah,
Right.
close it. The price I can take it down. It's an interesting concept of ask price and the final price that you get to, right? Because you have some people that ask exorbitant amounts of for an asking price, and you might land much lower. So you might have a like, I don't know, a 10 to 15%. 10 to 15% is a pretty big delta to land at. That's like on the more higher range. And usually it's not that big. Meanwhile, you have people that priced it right on the money. This is where usually we suggest we price things right now is you want to be right around maybe give or take 50, 60K in a detached house to where people are going to strike a price with you. So that's like maybe a 5% bandwidth there. That's probably 3 to 5%. It's probably on average. And then you have the other strategy, people price it low on purpose to get multiple offers. But in this market, there isn't momentum for that where you'd actually have to go over ask price. So I'd say to answer your question, Keith, like the ones that are selling right now are usually the people that price it close to the money. Usually that's within, yeah, like 2 to 5%, unless you get an outlier who's priced it quite high, in which case there you ideally could come to an agreement. But if they priced it here, they might not take your offer down here either. So that's why people usually don't want to waste their time with the overpriced listings. They usually like to either go to the ones that are priced on the money or they feel like it's more realistic. So it's yeah, it's a range, but I'd say 1 to 4% is probably what you're seeing mostly right now for the correctly priced listings. Thanks for the question.
One question that we have, first of all, is a very good talk. We really enjoy it. Um, Thanks for the effort. One question we want to ask is on the status of the economy. You know, Vancouver has always been one of the most unaffordable city in the world, you know, in Canada, in the world. Um, what's your view on the economy of especially Vancouver going forward? Like, are we seeing wage gain that perhaps is faster than in the past that make this place more affordable going forward? Any discussion on that?
Mhm.
Right. You had a talk. Did you have a slide on the unaffordability? We had one, right?
Yeah, we
Improving.
might have taken it out,
Okay.
but that's a really good question.
Yeah.
Like what we're seeing right now from these a lot of this data is from the Randy team. They talk to us basically on a weekly basis of what's happening, what we're seeing with wages. And generally right now it's kind of like going up on an inflationary basis. We're not seeing a big uptick, but they are moving up. Just to follow with the inflation. Meanwhile, we're seeing prices coming down. So from an affordability standpoint, it is definitely better now than it was 2 years ago,
Mhm.
when prices were still quite high and wages were not as high. So ideally, you come to a cross section where inflation keeps the wages keep up with inflation. Meanwhile, we have the prices notching down a bit more over the next course of the next, say, 12 months. And you start hitting a point where it is more affordable. So it's a unique opportunity right now where the international doors are a bit more closed, and we have great time for locals to make transactions happen right now before things reopen. So yeah, to answer your question, yeah, I think that there's wage growth, and it is more affordable, long story short, in Vancouver than it was 2 years ago. And ideally, we come back to a good balanced market in that way.
I was also looking at, I mean, provincially, I think British Columbia is faring one of the best in terms of
Yeah.
the unemployment rate as well. I mean, we're not so, our sector is a little bit more diverse. We're not so heavily weighted on any one particular area. I know in Ontario, they were hit pretty hard with some of those tariffs there, particularly with the auto sector. So we're not definitely certainly not immune to tariffs here. But I know BC has fared pretty good overall in compared to the other provinces.
Mhm.
One thing to keep in mind as well here too is like we just had the worst year like in the past 25 years, and pricing in Greater Vancouver area came down about 4.5%. Fraser Valley came down a bit more, around 6.5% there. So, all things considered, on a, big property that is significant, but, all things considered is not too bad. So, prices aren't falling out of the sky despite all of the headwinds that we've had against us and we will be facing for the next couple of years here. But I think we'll get through the next couple of years here and things we're going to start to see rebounding.
I think
We
one
got a
thing,
couple. Oh, sorry. Go
sorry,
ahead.
one just a bit follow up on that. I think one thing perhaps would be interesting is on the plot that for various phases to reach the valley and turn back up.
Mm,
At the low point of the valley, I guess financially people call it the valley of death, is where how would the affordability of the previous valleys compared to the one we're seeing today?
hmm
That may give some hints whether we are closer to the bottom or not, I guess.
That's an interesting way to think about it. We can certainly talk to the Intel team and see what if they can run some numbers on that. That's a I don't we don't have that data with us, but that's an interesting perspective to have, and maybe that would give some guidance.
Yeah.
The past two valleys and recoveries were quite symmetrical. It's a mirror down, mirror back up. This one's a bit of a up and down, but kind of trending down. So. It's hard to know. We have to think it's going to be symmetrical. It's going to take equally long to come back up to May 2022 price. But that we can definitely check and get back. That's an interesting question.
Okay,
Yeah, I
thank
mean,
you.
yeah, from my experience as well, things tend to grind down and tend to fly up in terms of pricing. It's just things when they start to pick up, they pick up pretty quickly.
Mhm.
When people are really optimistic, buyers in particular seem okay with just okay, we'll bid up, we'll pay a little bit more. But when it comes to selling the property and taking a realized loss, sellers are really quite hesitant, and a lot of sellers, there's no shortage right now of sellers that are kind of stuck in 2022 in their head, and they think that I'll just wait for that pricing to come back, and they're going to be waiting for years and years. So it tends to be a bit more of a slow grind to the bottom than it does to for things to take off.
Thank you.
You're
Mhm.
welcome. We have a couple in the chat here, Daniel. When you say, for the first time home buyer question, when you say you are looking for long term, how long are you referring to? I guess I can answer that since I was doing the long first time home buyer slide. I would say 5 years, Ray. That's probably a good amount. Like 4 to 5 years is a good guideline. Like what we're thinking, we want the ownership to extend until the late 2020s, early 2030s. Like that's the 5 year window. That's where we feel like prices will rebound. So to gamble on a 2 year turnaround is a little bit tight to sell and buy again. Again, 5 years I think is the rule of thumb plus.
Yeah.
And then one more here. Dan, I can ask this for you. Have you seen an uptick in inquiries from first-time home buyers?
Anecdotally, yes, actually. I've got about like three or so that recently reached out. Um, Two of them actually are currently living at home and sort of just been waiting for the right time to buy. And I think they're kind of both like, okay, well, I can continue staying here. I can continue saving money. Logically, this actually makes the most sense. But at some point, I do want to move and have my own space, and there's benefit to me. And for those people, yeah, maybe it does make sense to wait a little bit longer. But if you see the right property that makes sense for you, I mean, how much are you realistically saving here, right? If prices go down maybe another 5% this year, which I think would be on the heavier side personally, but definitely possible. Maybe you're saving what, like $50,000 or so, but you finance that and your payment sizes aren't going to be drastically different. And again, if you find the right property that's a quality property, if things are going to be busier later, you might not be able to scoop that property up, right? Maybe it's only an opportunity right now because of the slower market. So yeah, logically it could make sense to wait, but you got to think, what is the value to you? The best time to buy is when it makes sense to you to do, when you have the ability to do it and it makes sense in your life. But
Awesome.
yes,
Piyush.
more first time buyers, I'd say, recently, because last year was pretty slow with that.
Thank you for the question, Piyush.
Hmm.
And Ray as well. Thank you. Any last questions here before we let you guys go for the evening? No,
Yeah, I
we're
got a real estate unrelated question. How do
yeah.
you get a cheap FIFA ticket? It looks like you had to mortgage a house
Oh,
to get
you
one of
gotta do
those
a
things.
lottery. Yeah.
I'm
Gotta
not
get a
even.
lottery and flip it around. That's the best. You make some good money that way.
I'm curious if anyone's going to be trying to rent out their apartment or room during FIFA. I'm certainly thinking about renting my place out during FIFA. During Taylor Swift, I was able to get like several $100s a night for a room. So it was a pretty good deal for me, and it worked out well for them too. It was a win-win for both of us. I'm curious, is anyone planning on trying to rent out their place? Because the hotel rates are crazy right now.
Yeah. Oh, we got one more question here from Keith.
Sure.
Have detached development costs stabilized at all? Seen a lot of teardowns sitting on the market.
Mm.
Yeah, so it's definitely slowing down. They haven't come down a ton from when we talked to builders. They have come down a bit, and they probably will come down more. These detached homes that are needing work are going to be tough to sell. It's going to be tough to sell that to a young family that doesn't want to do a bunch of work. So development does make the most sense, but with the market coming down, developers are going to be paying less as well. So. Yeah, we could see costs coming down this year. They've started to and likely will, in Vancouver, especially anyways. For buyers, can we expect May, April in terms of increased inventory? Yes, definitely going to have an increase in inventory April and May. That's when most people list their homes.
Hmm.
And this is kind of when actually was the best time to be a buyer because last year, January, there wasn't a lot of inventory. Buyers were fighting off the few homes. May and April is, or March and April is when everybody listed, and buyers had way more options and way more breathing space to look at different homes. So, yeah, March and April is typically the best time as a buyer because you have more choices on the market. And Piyush says banks are hesitant to finance development right now. So Piyush is an awesome mortgage broker on the phone call here. And thanks for that addition there, Piyush. It's good to know. I think there's just a lot of hesitancy to finance those. So yeah, people are building probably like we're talking about lane houses, family oriented housing for themselves. But to do build and sell in a short turnaround time, it's a bit more of a gamble, but I think I do see opportunity in the next year, 2 years for that. I think there's going to be a big demand for family oriented housing as the
Hmm.
millennials are having kids, especially newer housing, because they don't want to live in old homes. They want to live in something newer that they can stay in for 10 years. So I think those townhouses, they're not building enough. Those will be holding more value, I would say, in a downturn here.
Hmm.
All right. Okay, well, we'll let everybody go here. Unless there's last question, last one. All right. Okay. Well, thank you for joining. So, we're very thankful for you to come on the phone call here and spend the time with us this evening. We will have a recording, so we will send it over to everybody. If you have it, you want to share with anyone, feel free to do that. And we are happy to get connected. So have a great night. Thank you for joining us, and we'll see you the next one.
I guess.